I want to take a quick look at bonds. I was trying to find a trade I liked in it, and initially when I started looking at it, I was thinking about a trade moving up. You know, we do have a downtrend here, which you can see fairly clearly. Got a couple of weekly trend lines. I probably need to take a few of these off. It's getting a little confusing, but you can see you've got a trend line here that we're getting resistance at, and you've got trend lines right here, which we did get some support at. It broke through temporarily down to this 2 ATR move, but then it moved back up. You can see here that we've gotten some move back into consolidation range on the TTM squeeze indicator, and really what we're looking at right now, is not really a good opportunity to buy here. I'm going to look at the moving averages too, so you can see it a little better. We've got the 200 SMA here, but everything else is showing that it's moving down, which is obvious from the pattern here. But you've got the 10, 20, 30. And the 50 here, although we did get a good move up as we got some pullbacks in the market. Looking at the wave indicator, you're seeing something similar. We didn't hit this Keltner channel here, but we did move away from the wave. Now we're moving back into it. You could make an argument that you've got a buy zone right in this area should it pull back into this trend line, into this wave. But you really got to take into account this overall downtrend. So as I was looking at a trade here, there are a number of things that I wanted to consider. I don't really think I can go long here. First of all, I've still got a downtrend that hasn't changed. I'm not in a good buy area. And really, with the way the market's been behaving lately, I'm really expecting it to continue to move back up. Yes, we've had some, a few little down moves here the past couple of days, but really, almost anything is making this market move up. And that would tend to make me believe that the bonds are going to continue down, at least into some support area, through here. I'm not overly confident with these two trend lines as far as their ability to hold. I feel pretty good at this level as far as a hold, maybe in this area, but these trend lines here are not giving me a lot of confidence just as I look at price action and this overall move down that we've seen. And again, the market is taking any and every opportunity to move back up. So what I was thinking is what would be a relatively safe trade to place, take advantage of a continued move back down, even though admittedly this candle right here is showing a little bit of strength as it comes off the lows of the day. I'm thinking a move down, and so I want to look at what trade that I think would be the best to place in this particular location. Overall, again, I think it's going to consolidate or move back down. I really like to place calendars. Yes, you could do a debit put spread. You could even look at a credit call spread up somewhere in this area above, say, 140 possibly. I don't think I would do it at 139. Possibly 139.50 would be another place you could do it. But I'm going to price out a calendar put spread and see what that would look like for you. What I'm going to do is I want to go ahead and sell the January 10th 138. So I want to actually I want to buy a calendar, and I want to short the 10 January, and I'm going to go ahead and buy the February, the 7 February. So you can see I can get into this trade for about $100. It's $1.03. I've got pretty good time decay here. I've got 50 cents roughly here, and that reduces my price here. If we look at the chart, like I said, I'm thinking 138 is where I'm after. So that means it could pull back into this area, and as long as it consolidates between 139 and probably about 137.50, which is where this trend line is, this is a pretty good trade. Now, when would I get out of this trade? If I went ahead and buy this calendar, which I'm going to do in my small account, I'm going to buy a couple of contracts, I would set a move above, say, 140.17. I would set, which would be the high of this candle roughly. I would set this as a stop, and if it hits this alert, then I would go ahead and close this trade for whatever loss or gain that I had. However, otherwise, I'm going to try to stay in it. So if I'm getting in it at $1.03 debit, then ideally I would like to try to close this trade at about $1.30 credit, which is just a little bit over a 25% return. And that's typically what I shoot for on my calendars. I'll go ahead and place this in my real account. This is my simulated account, so I'm going to switch over to my real small account. I'm going to go ahead and place this trade today. And like I said, I'll put a stop loss probably right in this 140, 28, 140, 34 range, and should it get in this area, I'd go ahead and close it for a loss. Otherwise, I'd probably continue to roll it if it got down too far so that the calendar was at a loss. I would probably continue to try to roll it and hold on to it. I'm going to go ahead and place this one. If you like this video, please like it in the comments. Please subscribe. If you have any questions, please let me know. And we'll talk to you next time. Thanks.